Good afternoon, and thank you for joining us today. My name is Alina Islam, and I'm a Senior Research Associate here at Red Cloud Securities. Today's webinar focuses on World Copper Limited, an emerging copper oxide developer in the Americas focused on advancing its flagship Escalones copper project in Chile. For the webinar today, we have with us Nolan Peterson, President and CEO of World Copper. Nolan will provide an introduction to the company, including an overview of Escalones, where a recently published PEA outlined robust economics for the project. He may also discuss upcoming catalysts that are on the horizon for the company. After the presentation, we'll take questions live. Please send us your questions via the chat box, and we'll get through as many as we can. Before we get started, I just wanted to mention a few disclosures. For World Copper, there may be forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the World Copper presentation located on the company's website. For Red Cloud Securities, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. We note that this call does not take into account the particular needs and situations of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for World Copper specific disclosures. With that, I'll hand it over to you, Nolan. Please take it away.
Thank you, Alina. There's the slides. And thank you everybody for attending, and thank you Red Cloud as well for hosting. I just want to point out that this slide is a little bit out of date. As of yesterday, we're now trading on the OTCQX market, not on the OTCQB, so this will be updated. And also we need to update with Red Cloud the intro, because we are focused on the Escalones project in Chile, but we also have our project in Arizona, the Zonia project, which will also be moving forward aggressively, and we'll talk about today as well. So everybody, I'm going to assume that this is a relatively new audience, and although I'm sure there's a few people here who are here for an update. Let's get started. So World Copper is a Canadian junior mining company based in Vancouver. We have assets in Chile and Arizona. The assets in Chile are the Escalones and Cristal projects. Escalones is our flagship asset for the company, and Zonia in Arizona is our development stage asset, which we just completed a merger with Cardero Resources and brought into the company 2 months ago at the end of January. The company was formed by this gentleman, or founded by this gentleman, Henk van Alphen, in the top left here, who's our chairman and founder. He has a long and distinguished history in the Canadian mining space, including his first success story, which was Corriente Resources, which was an exit for $860 million, as well as chairman and founder of numerous other companies, including one, International Tower Hill, which at one point was worth over $1 billion. He is currently operating a company called Wealth Minerals, which is dealing with lithium in Chile, and he's had this gentleman named Marcelo Awad helping him for the last few years navigate the Chilean mining space and political space. Marcelo Awad is most notably the former CEO of Antofagasta Minerals, which he took from $4 billion to $20 billion in market cap and constructed 3 major copper projects in Chile during an 8-year tenure. A few years ago, they got to thinking that they should leverage off of Marcelo's experience in copper, especially in Chile, and then get involved into the copper space, and that's how World Copper came about as Wealth Copper, a subsidiary of Wealth Minerals. Last January 2021, we did an RTO and listed on the TSX Venture and went public for the first time. In April of last year, I joined the company. My background is engineering. I have over a decade of experience in project development, advancing projects through construction and then into completion. And 2 major projects, I was at a senior level in the project management team. That would be the Kamloops New Afton Copper Gold Project, as well as the Rainy River Project in Northern Ontario. I also have an MBA and a CFA designation and have spent the last 6 years in corporate finance, budgeting, planning, strategy, accounting, all within mining. So I bring almost 2 decades of experience in building companies, advancing assets and projects. So we have a little bit of a different flavor to the management at the highest levels of this company. We are developers. we know what it takes to develop assets, and because we have the assets, that's the type of leadership that we need at this point in time. Let's talk about copper very briefly, since I'm sure that many people who are on this call are aware of how in demand copper is. What we like to lead off with is this slide, which is showing the historic production of copper grades in the last 30 years. You can see that the average grade mined in the last 30 years has dropped from about 1.6% to now less than 1%. The highlight from this, the takeaway, is that copper grades are becoming scarcer and scarcer, and it's becoming harder and harder to find good mines and put them into production. Many estimates say that the industry needs to spend close to $100 billion, sorry for my mouse here, $100 billion by the end of 2030 to close a deficit of 12.5 billion pounds of copper. And this is a startling stat. Almost over 200 mines are expected to run out of ore by 2035. That is not that long, not that far away in the mining space. Now on the demand side, we have another front increasing, which is the growth in infrastructure needs for copper. Of course, copper is used in our daily lives in anything that is electrical related, but we're certainly seeing aggressive growth in electric vehicles, as well as renewable energy, such as solar and wind power, which use more and more copper, and of course, the westernization of economies in Asia and Africa that bring them to the industrial standards that we're used to in North America or Western Europe. So putting this all together, we see here a copper crunch forming by starting in 2025 and by the end of 2030. This is accounting for the potential of new mines coming online. This is not saying, maybe there's a mine in here that somebody is waiting for higher prices to come online. This is a gap that is going to be forming even with low probability mines coming. In the last decade, $50 billion was spent on exploration and development, and only 225 billion pounds of copper was discovered. That sounds like a lot, but more copper was found in 1 year, 1991 alone, than in the last decade alone. So really, you can see here that the supply-demand crunch is building, and there's really no easy solution for this except to build more mines as we find them and advance good and strong projects. This is one slide I also like to highlight here that shows the demand for copper growth as part of a reduction in greenhouse gas is more in line with other metals such as lithium and than it is with more industrial metals like aluminum or iron, which aren't even on here. So this is representing a substantial growth in the demand for copper to limit our temperature impact, our greenhouse gas temperature impacts. You can see here, as I'll just move along very quickly to our flagship asset. So you can see why we're in copper, and now we'll talk about what we have going on. So we have my image here is blocking the map a bit. You can see here, this is our flagship asset. It's Escalones project. It's in the Santiago region of Chile. So it's near central Chile. It's 35 kilometers east of El Teniente. El Teniente is the largest underground copper mine in the world. Thank you very much for that. And you can see here, there's mines in the region already, and this is an area of good infrastructure, including power, water, and road access. So we think that there's a very high prospect of an easy development and a less expensive development for this asset. This is a copper porphyry skarn system here. You can see here 25,000 meters of drilling in 53 holes was carried out by the previous holders of this company, of this asset. That company is called Tri-Metals, now called Gold Springs Resources. And immediately to the south of that established resource, we are currently drilling this potential target, which we call the Mancha Amarilla. We believe that the Mancha Amarilla is an extension of the main resource, and that drill program is in progress at the moment with 5 holes completed, and it's all looking very good. The idea here is that this program will potentially double this resource in size, representing the fact that it's only been half drilled to date. And if we prove the mineralogy continues, we can double it and make this an even larger asset, which we'll talk about as well in a second. We also have 3 copper porphyry skarn targets to the northeast, which are confirmed with surface sampling and no drill results and geophysical work. And we would aim to get a drill program into the Rio Negro target early next year, which would be the next season in Chile for drilling in the next summer. And then we would circle back to the Mancha Maria in a couple years to advance a PFS, FS level drill program and take us down the path of development. So let's talk about the resource. Actually, before that, I'm going to do a high-level explanation of the 2 types of copper resources, because most people are very familiar with sulphide resources. Now, sulphides account for about 70% of the world's production of copper, and oxides account for about for the remainder. Now, sulphide projects are the high-profile projects because they are much larger. They require a significant initial capital expenditure on the order of $2 to $3 billion on average. They have a high operating cost. They have low operating margins. They have large water consumptions, 4 times more water consumed per pound of copper produced than oxide heap leach projects. And they require tailing storage facilities, and they require port facilities, and the shipping of concentrates, and then the smelting process, which emits 40% more greenhouse gases per pound of copper produced than oxide heap leaching. They're characterized, however, by long lives of mine and very large production capacities. But the paybacks are very short and are low, and the internal rates of return are very low as well. Oxide heap leach projects, in contrast, are much more profitable, much higher in economic viability, lower initial capital on the order of hundreds of millions of dollars, low operating costs, high operating margins, no tailing storage facilities, greener and cleaner, and easier to permit. So what does that mean for Escalones? Well, as I mentioned, the previous holders of this company were a company called TMI or Gold Springs Resources. It's in the name. They were a precious metals focused company, very much interested in getting the gold out of this asset, which requires a sulphide flotation operation. They spent millions of dollars trying to understand the metallurgy of the sulphide layer of this oxide. So every of this porphyry, every porphyry has a sulphide layer as well as an oxide cap. They spent millions of dollars on that sulphide layer trying to make it work, and they couldn't. They didn't get the economics to make sense. It was too expensive, and the operating margins were too low. So they sat on it. What our geologists noted very quickly was that the higher grade copper blocks are all within the oxide layer of this deposit. That allowed us to pick it up and run metallurgical test work on the oxide layer to prove its amenability for oxide heap leaching, which allowed us in August of last year to produce a resource statement of 426 million tons at 0.37% copper for 3.5 billion pounds of copper in the ground. The important thing to note about this resource is that it is all oxide. So these grades, you may look at them and say, well, maybe they aren't that good because you're comparing it to other projects that have copper equivalency, but these are actually very high grades for a copper oxide project. There's another project in Chile, for example, called Lomas Bayas, which is owned by Glencore. Their resource is under 400 million tons, and their grade is 0.27%. So we have a better grade than a mine in operations in Chile held by a major that has a 15-year oxide mine life. This is also the largest copper oxide project in development in Chile as of August of last year, simply based on the work that we have done on it since we picked it up. What is the next step after a resource statement? We prepared a PEA, or preliminary economic assessment, which we released just in February of this year. The economics were spectacular: $1.5 billion post-tax, 46.2% internal rate of return, 2.2-year payback at only a 360 copper price. What makes this all possible is the low initial capital, 438.4 million. This is an advantage of an oxide project, and this benchmarks as well against other oxide projects, which I'll show you in a second. Also, the cash costs are very good at $1.19 per pound C1, and this does not require a gold, molybdenum, or silver byproduct. This stands on its own, which indicates that this is a profitable copper mine in all foreseeable copper price environments and does not require a strong gold environment as well to make it profitable. So this is how now Escalones stacks up against other projects that are in development in Chile and South America at the moment. And this is a small list, so this should be an indication of just how far advanced we now are now that we're at a PEA. This is a list, and there's a few that aren't on here, but not that many more. A list of projects that are at a PEA stage of development or better out of the hundreds of companies out there that are advancing their projects through exploration. So you can see at $3 copper, in many categories, we are ahead of the pack, including internal rate of return, 47% on a pre-tax basis. The only other projects that can compare are the other SXEW copper projects, and we are the only projects that can be built for under $500 million. The rest of these projects you can see here all have a big fat one or more in front of them and the initial capital indicating a very high initial capital cost. So we see that here. Well, actually, this is the slide that I like to point out to investors. It's very important. This is the one takeaway I'd like to show you. This is our P to NAV, or price of our company market cap against the NAV of our asset. These are all single asset companies, even though we have another asset, which we'll talk about. We also can see that we're all in Chile or South America. We're all at the same stage of development. None of these companies on this list have cash flows, so there's no comparison there. And you can see our nearest Oxide comparison, the company Marimaca, with a fantastic project, by the way. We are twice their NAV, both at a PEA stage, yet they enjoy a 5x market cap gap and an 11 times P to NAV ratio gap. So you can see that management obviously thinks there's a significant room for improvement and runway for us to grow into our proper valuation. And at this point in time, we are focusing on getting the message out there and marketing. We've never done a brokered financing. We've just picked up our first analyst 2 weeks ago, Taylor Combaluzier from Red Cloud. Thank you very much for that. But other than that, this is a story that has flown relatively under the radar, and we've been doing some very exciting things, as you can see. This is just how Escalones stacks up against other projects in a visual form. You can see here that we have a low initial capital, high internal rate of return, and the size and scale of much larger, higher profile projects that you may be more familiar with. This is because, again, we are the largest copper oxide project in exploration and development in Chile right now. And I want to show you here as well some of these very large projects. You can see, say, take for example, Taka Taka over there. Taka Taka here has 25 million pounds of copper in the ground, billion pounds, sorry, and we have 3.4, and yet we are nearly the same scale as they are, simply because we have the efficiencies of capital of an SXEW project. You can see that as well here with the low initial capital, the high quick payback, and again, the size and scale. And again, projects considering SXEW, we lead the pack here on the left, and the only other ones that can be considered are the ones that are SXEW, Marimaca, and Antilla. That is the advantage of a heap leach project, especially of the one of the size and scale that we are at. Also, you can see we have infrastructure advantages, always important in helping to reduce costs. Our pit elevation in the Andes is actually fairly moderate compared to many of our peers. Our road access is very close. Power access is very close as well. Distance to port, which is not that important for a company that is producing cathode material, since we don't have to ship massive amounts of concentrate. That's an advantage. And you can see the very significant one, no tailings storage facilities, easier to permit, faster, and lower initial capital. So talking about our expansion plans as we advance this project through development, as I mentioned, we're currently drilling this ridge here on the Mancha Maria. We believe that this is a resource that is only half drilled off. You can see here the Mancha Maria is a alteration zone continues. The previous holders of the company or the asset only got to this ridge here. We're going to prove that the mineralogy continues, and there's a potentially 300-meter thick blanket similar to the north side, the Meseta. And if we do that, we will then have a one large resource north to south that is potentially doubled in size. We also have skarn mineralogy which continues, that has the potential to add 40 to 80 million tons of higher grade oxide material, and we'll be drilling this once we've completed the Mancha Maria as part of this year's program. So that's Escalones. I'd like to move on to another asset, or other asset in Arizona, which is also very strong and also at a development stage. So Zonia is in Arizona, also an attractive copper mining jurisdiction. Sorry, I'm just going to take a glass of water here. This project is a brownfield asset, and you can see here some pictures from former production. It's already been stripped, very good for future development, and the leach pad from former production, as well as some infrastructure. So this is a fantastic asset to advance, and we are going to do that in the near future. You can see here all the drilling to date in the southwest corner has been on what's called private patented land in Arizona. That means that this project can potentially be permitted and put into operations on an accelerated timeline in 3 to 4 years. So very quick in the mining industry. This resource is 100 million tons that went into a PEA in 2018, but this resource is actually 150 million tons, was constrained to the amount of material that would fit on that private patented land. So we have the option here to expand this project and make it larger by 50% without spending a single dollar on exploration. We also have a target to the northeast of 300 to 500 million tons, which we aim to do a drill program on later this year, just to see, explore the potential up there, and overall make this project much larger than it is at the moment. But the economics of the project are still very good. PEA was done 4 years ago, $200 million initial capital, after-tax NPV at $3 copper, about $200 million, and at $4 copper, it's a $450 million after-tax NPV and $150 million after-tax first-year free cash flow. Payback in a little bit over a year. This is a no-brainer, slam dunk project if we can get it across the line, which we will. Excuse me. As we advance it. So our aim here is to do a PEA update this year to explore the option of bringing in the larger resource, and then make a strategic decision. Assuming we go back to the fast track permitting approach, which would get us to cash flow sooner, we would aim to complete a feasibility study next year, and then potentially be starting construction in 2024, and then in operations by 2025, generating cash flows that would synergize well with Escalones as we advance that project to completion as well. There's another project that in Arizona that, again, I like to do benchmarks. That's just my background, as comparison's the best thing in the market. We have a peer company called Arizona Sonoran, also operating in Arizona. Just went public in November with 4 analysts covering them. They traded $160 million. They have a similar PEA stage asset on a brownfield project ready for development. They believe a fast permitting path similar to Zonia. The NAV of that asset is about 20% larger than Zonia's is, despite the fact that they have 2 times the mine life, so an 18-year mine life. Because they are an underground mine, the costs are a little bit higher, as well as the sustaining capital. So if you completely negate everything I said about Escalones earlier and just attribute the value of the company to Zonia, that alone, I would suggest, it makes us undervalued. When you put the 2 assets together, though, it's quite clear that we have 2 projects with 4 billion pounds of copper oxide in the ground at a PEA stage. So that means 43101 verified by independent engineers, 2.3 billion pounds after tax valuation at $4 copper, and a $50 million market cap right now. These types of valuation gaps do not exist for very long. there are not that many projects out there. Can't think of any actually that have 43101's PEAs, established economics, and have such a significant P to NAV valuation gap. So that's where I'll leave it right now with that message, and I'm happy to take any questions that people may have.
Well, thanks, Nolan. That was a great presentation. So we'll start the Q&A portion. Just a reminder to our participants, you can type your question into the chat box at any time. So first up, Nolan, with two projects currently in Chile, Cristal, which I see on the screen, but you did not discuss. Could you maybe speak to the political environment? Given the recent developments, do you see any impact to the way mining companies will operate in a country going forward?
Yeah, so that's obviously been something we've been asked a lot over the last few months. It's kind of died down a bit, and I think the questioning at least, and I think that is largely because that the new government finally took power in about a month ago, actually. And since then, the messaging has become a lot clearer. I was actually in Chile about 2-3 weeks ago now at CESCO, which is the largest copper specific conference in the world. And the mining minister spoke 3 times in her first public remarks to the mining industry, basically reassuring us that, business in Chile is still very supportive. The government's still very supportive of mining and business in Chile, and that there aren't going to be drastic changes. Now, with any new government, there will be some changes, but we think they're going to be muted. And I think that the market is starting to see that as well. So as I mentioned, a lot of that has died down a bit. Now, just broadly speaking, I didn't even know the name of the previous president or government because they were largely not at the helm of the messaging, so to speak, for the last 6 months or so. And that's kind of why I think that people kind of got concerned that they didn't think anyone was in charge. And, now that the new government is in power, there's strong messaging. And, as I mentioned, I don't think it's going to be a significant concern.
Okay, great. Nolan, could you maybe clarify how much of the Escalones project World Copper currently owns? I know there's some outstanding payments that are still remaining on the property.
Yeah, so we have a $500,000 payment this year in June, a $500,000 payment next year, and then a $3 million payment in 2024. And that is complete ownership of the asset. We have 100% option ownership of the project.
Okay. Moving on to exploration next. So I know at Escalones you mentioned 5 holes have been completed. How much are you planning? How many holes are you planning at Escalones?
So we have 11 holes planned and up to 5,000 meters of drilling along that ridge. Sorry, they can't move very quickly. And so that is the plan. We'll be providing an exploration update as well very soon. But as I mentioned, we're going to be aiming to do the Mancha Maria and then the Scarn, which flanks it down here. We want to get the higher elevation stuff done sooner with an aim of completing the drill program by before the winter comes in Chile.
Okay. What about at Zonia? I know you have drill permits pending. When do you expect to receive those?
Yeah, so once we complete we're going to complete a desktop study, a review of all the work that's been done, just verified as we brought the asset into the company, and then we'll be setting our exploration plans for later this year, and that will be focusing primarily upon that northeastern target in a very small program. We're looking for oxides here, so we don't need very deep holes. We're talking 100 meters, maybe even 150 tops. To get started, so we can do a lot of shallow drilling very inexpensively. That will be in this area, and then next year, as we advance to a feasibility study, we will be doing about a 10,000 meter program here to give us the data needed to create a feasibility study mine plan. And that's not really exploration; that's more infill drilling.
Okay. So just if you could maybe put it on a timeline, Nolan. So you're exploring Escalones right now. We're looking to start next and then sort of Zonia later this year and into next year. Is that how someone should think about it?
That's correct. So we're going to be exploring at Escalones this year as well as next year. And then we're going to be developing all along the way as well, doing a permit information acquisition to support our drill permits for the deeper infill drill program at Escalones in 2 years. But along the way, we'll be doing the smaller step out programs to kind of understand the footprint of the area. Cristal is kind of a greenfield asset, which we're going to aim to do later this year as well. That is a very small, inexpensive program to just sink some deep holes into the property. This has not had any drilling done on it yet to date. And so this is a relatively low risk, high reward play. And then at Zonia this year, it's step out drilling just to make sure that we have a good understanding of what we're dealing with. And then next year, going back to a pure development path, assuming that our strategic review outcome is that we should pursue a faster permitting timeline for this asset.
Okay, great.
That's basically the next 2 years.
Okay, and then at Zonia, there's a PEA that's supposed to come at the end of this year?
Yeah, we would aim to start that in the next few months and then aim to release it in probably Q4, early Q4.
Okay. Okay, last question here, Nolan. Could you maybe sum up the upcoming catalyst for investors in the next 6 to 12 months? I know you've touched on some of this already.
Yeah. So a lot of drill results we would expect from Zonia, from Escalones and Cristal. We are doing everything we need to do on the other side of the fence, so the corporate development building. You know, what we've done over the last year is very rapid, I would say. You look at a lot of the companies that are out there. By the time you hear about them, our investors hear about them, they've been building their story and telling their message for 5 years, sometimes longer, you know, doing drill programs and then putting out resource statements and expanding them and then getting to a stage. In 1 year, we put out a PEA. So look at the news flow that we've done last year and look for the same type of news flow this year. We just uplisted again to the OTCQX. Expect us to be on the TSX by the end of this year. You know, we're signing deals and agreements to firm up infrastructure in the Escalones region. You know, things that we know the pieces that we need to put in place outside of the resource, outside of the actual mine to build a mine, right? We can't just keep exploring here and then, you know, we're behind the curve on figuring out what our water answer is or what we're going to do for power. So look for those types of development catalysts as well. In the near future, there's going to be a lot of news coming out of this company. Very happy with that. You know, I like to give the market exciting news to talk about and to see. And, you know, you can see what we've done last year. As mentioned, expect more of the same as we grow.
Okay, great. Well, lots to look forward to in the coming year. So that's it for the Q&A portion of the webinar. Nolan, I'd like to thank you for taking time to host this webinar with us. And just as a reminder for our audience, our next webinar will feature GoviX Uranium tomorrow, April 21st at 2 p.m. Thanks for tuning in with us, everyone. Have a great day.
Thanks, everyone. Thank you, Alina.